Can we make some news this morning? Are you going to adjust from December to September or from December back to 2016?
No, I assure you that we're not. Although I will promise you we'll make some kind of news this morning. How about
okay,
that, Tom?
well, we'll let you make the news later. I know you have to do that with your clients, and there's compliance issues there. The news out of Paris is important, and it speaks to the institutions being behind Ellen Zentner and behind the market. Do you just assume in your work that the Fed will catch up with OECD and bring down their growth forecasts for the nation?
Well, it's clear that when they meet later this month, they are going to have to revise lower their growth outlook, especially for this year. I mean, the first half has disappointed quite a bit. It's undershot estimates quite a bit, such that we would have to get, say, 4.5% to 5% growth in the second half of the year for the Fed to maintain its current growth numbers that it had put out at the March meeting. So those growth forecasts are going to have to come down. But that's not going to have a bearing on whether we expect they're able to get a rate hike in this year or not. We still think they're going to get one in December, just under the wire before the end of the year, because growth is going to be stronger in the second half, and that's what they're hanging their hat on.
Ellen, your clients are watching these numbers too and are as confused as we all are about what the path will look like. What's the most frequent question you're getting from them?
Well, it's always, it continues to be that focus on the consumer. And we've been putting out a spate of research in that area. One, just yesterday, a report we released showing that if you look at history, the lag is about 6 months between the time that gas prices bottom and the time that that transmission to broader consumer spending really takes hold. Now, May is going to be a big month, and we've been pounding our fist on the table that that personal savings rate that jumped so much in the first quarter is going to float back down. Households are not going to leave the personal savings rate that high. And look at auto sales yesterday. They reached a 9-year high. Our estimate of that control retail sales, which takes out gasoline prices, motor vehicles, and building materials, we've got it up 1% in May. That's a big number, and it's going to look like the start of, yes, that gas savings is finally coming through. That's a big turn we think we're on the cusp of right now.
Ellen, if you say that growth is going to improve greatly in the second half and maybe make up for some of the seasonality and the weakness in the first half, why should the Fed wait until December?
That's a very good question. To us, it still comes down to core inflation. We're still digesting those lagged effects of when the dollar raced higher from August through early March. That was very hard for the Fed to digest. A big effect on core goods prices. Inflation's just not.
Okay, but Brennan, we got a huge response yesterday, that inflation chart. What is inflation? Is it Cleveland CPI, or is it core PCE, or is it core, or is it headline? I can't make that call. I think
I think the basic question is whether you pay attention to gas or not. And we just got a really clear answer from Ellen Zentner. Wait a bit. It takes a while for it to kick in. I'm looking actually at, you pull out the labor market conditions index, which is Janet Yellen's favorite indicator, and you show it in the negative right now. That's something that she's watching as well.
Yeah, so that's an index that the Federal Reserve puts out. It takes all of those labor market indicators, puts them into one index, and it has declined for 2 consecutive months. And that's why in the recent FOMC statement, it characterized the labor market improvement as having stalled. And so we are going to have to get that May employment report this Friday, and we're going to have to see the LMCI improve.
Where are you non-farm payrolls this Friday?
We're around 210.
210. Okay, so it's there but not there.
There's been some softening on the headline. Look, we've got energy layoffs. We've got some layoffs in the manufacturing sector related to difficulties with the rising dollar, and that has to be digested.
Yeah, that's
perfectly healthy
consensus for